Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, there's a lot for us to talk about in terms of the precious metals sector because of the fact that gold has continued to run higher, and quite frankly, it is so close to all-time highs. And even wrapping up this month on Thursday, it really looks like gold is going to close at an all-time monthly high closing price. This is also starting to pull up some of the stocks too. This week has been more encouraging, especially for some of the larger stocks, and to see some higher volume come in. First and foremost, though, when we look at gold and how close it is to all-time highs, what are you watching, Jordan? And what do you think the potential is here for gold to get to those all-time highs and, even more importantly, keep on going?
Well, Corey, my crystal ball is broken right now, but I feel pretty good about this move for gold. I mean, looking at, of course, the front month contract is rolled over to February. So that's where all the open interest is right now. But if you look at the December contract, it's still trading at 2048 today. And, based on that, that's well above the monthly all-time high resistance is at 2009. And there's, 7 out of the last 8 months or something like that tested 2000 and failed. So unless there's a huge dump tomorrow, gold's going to go out at a new weekly all-time high, convincingly, I might add. And it's the same thing on the weekly side. I think the weekly all-time high is at 2028. So the next couple of days, it looks like, I shouldn't say looks like, it's highly likely at this point that we're going to have a new monthly all-time high and a new weekly all-time high. And given that, you're probably going to see a daily new all-time high at some point in the next week or next couple of weeks. So clearly, money is coming into precious metals as the year ends. Stepping back, this is hugely significant. This is something that we've been talking about on these interviews for the last over 3 years. We have this huge cup and handle pattern that's super bullish, and now gold is really a hair away from breaking out. And I think at this point, it's almost, anybody who's watching this who's not a gold bug, I'm on some email list just to see what the chart technical generalist people are talking about. And you've been talking about gold a little bit more lately and saying, look at this, this is bullish, this is, this could break out, this is quite a breakout. So I think we're seeing, or we're going to see a lot of generalist money come into this market. So things are looking really good for gold. I don't want to make too big of a deal out of it, but you're breaking out of a 13-year base here. I mean, this is hugely significant historically. We just have to step back and really understand that, presuming that, this breakout isn't a huge fake out. But at this point, I just don't see any way it's not a huge breakout here.
Yeah, Jordan, you said it. It's something we've been talking about, it seems like forever, trying to get gold to break out on a monthly chart and finally get well above, convincingly above the $2,000 level, which looks like it's going to happen tomorrow on Thursday. But you brought up at the very end there, it's probably going to be a breakout of a large cup and handle pattern, a 13-year pattern. Hopefully it's a breakout, not a fake out. Is there anything that you think could happen in December or as we roll into next year on the longer term charts from a resistance standpoint or from moving averages, anything you see on the charts that could hammer gold back down and dash people's hopes? Is there anything that you think could stop the rally from really breaking out to new all-time highs?
I think it's going to be really tough at this point. There's just a lot of bullish factors that I think are really coming into the view of the market. And, you have long-term inflation expectations where some market indicators for long-term inflation expectations are starting to come down. But if you look at, I think it's the University of Michigan survey, not only for the 1-year inflation expectation, that rebounded pretty significantly. And then you have the 5 to 10-year one, which I think was hit a 12-year or 13-year high a couple of days ago. So you have the psyche of people. They're very concerned about long-term inflation, and that comes, of course, at the end of this great tightening cycle. And then at the same time, if you're looking at, I mean, I know this is kind of contradictory, but if you're looking at the bond market, we were kind of getting a bear steepening recently, but now, we've had this rally in bonds, and looking at the 2-year and the 10-year, I mean, of course, it's good for stocks, and it's good generally to see bond yields come down, but they've the last couple they're starting to come down. I don't want to say aggressively, but they're starting to come down, somewhat significantly. And if bond yields continue to come down, and we start to see a steepening there, because the 2-year just starts diving faster than the 10-year. I mean, that's a recession signal. So you have that on top of this worry about long-term inflation expectations, and then you have the interest on the debt, which is really becoming a problem. So fundamentally, it appears, and it's always kind of difficult to figure out, what fundamentals the market is really discounting with respect to gold. But it appears to me that, there is serious risk this coming year that they're going to have to ease policy when people are still really concerned about inflation. And that is everything that gold bugs have been waiting for a decade. And we all know that it's been inevitable that they're going to have to ease policy when inflation is still a problem and a long-term concern. So I basically, what I'm getting at is I think we are seeing an alignment of, of course, the market discounts things 6 to 9 months in advance. But if I'm just thinking about these fundamentals and looking what's going to be happening this year, in all likelihood, that's really supporting this move in gold. Potentially, I don't want to use a King World News type of word, but that's what's supporting this really, really historically significant breakout in gold that, we're a day or two away from, at least on, weekly and monthly charts. I'd have to think about it for a long time to really think about how this move might, not play out as we're all expecting at this point. I mean, but perhaps you get a really good move here to 2,300 or 2,350, and then you get maybe you get a snap back to 2,100 that potentially scares people that it was a fake move. But aside from that, at this point, I just don't see anything stopping it at this point. I already debunked the nonsense about people calling for a triple top in gold. I don't think the bears out there are calling for quadruple tops. I've never seen that before. But yeah, I mean, the bears, they know that it's over at this point.
Let's talk about the stocks then, because just this week, boy, oh boy, we've seen a lot more life in the stocks, and I think even more importantly, life in the majors too. Higher volume day moves higher, and you even look at something like GDX, and it has at least stopped that consecutive trend of lower lows and lower highs with the pop that we've seen just in the last couple days above that 30 level. So, Jordan, what are you watching when it comes to the gold stocks to show that it's not just interest in gold, but money's actually flowing into the stocks as well?
Well, you said it. I mean, the money coming into the majors and the seniors is obviously a very good sign. That's institutional. That's generalist money. So that's a good sign. That obviously will filter down to the rest of the sector. GDX, GDXJ, the Huey, they've broken out from inverse head and shoulder bottoms. So there's more upside there. Roughly speaking, another 10% or so. I think for GDXJ, if I remember, you have a measured upside target of around, I want to say 41. The April 2023 peak, it looks like it's just below 44. So that's a potential short-term target, perhaps over the next month or so for this move. That's trading at 38.30 right now. So you could potentially see that get to 42 or 43, around that area. It's interesting looking at the juniors, starting to see, at least some ones that I follow, we're starting to see some big white candles, some strong white candles. And that's what can happen coming off these bottoms, where these stocks just look like they're dead, and they look like they're never going to move, and suddenly you get a move, you get a real breakout in gold, or you get a huge rebound where it's talking about what happened in the past. You get a big rebound where it's clearly in a new uptrend, and then these stocks can they just really start flying. They're up 30%, 40% in a week. I mean, even the bigger juniors can be up that much in a couple of weeks. But yeah, I'm really focused on, not to go into one of your next questions, but I think silver, if I'm watching anything here, I'm really interested to see how silver will close in the next couple of days. I think that's more, to me, that's more of a confirming indicator for gold, more so than the gold stocks at this point. I know it sounds a little bizarre, but silver to me is more interesting here in the very short term.
Well, Jordan, let's get into silver then. That was my next question for you. And it was really, if you look at silver, it doesn't have the same kind of chart gold does. It's not getting ready to break out to new all-time highs. It's really been channeling sideways, stuck in a range. It's up at the 25 level, and I know there's some resistance right above that at the 26 level. But when you look at silver, it can't seem to really get as much momentum as gold. I guess some of that could be the fact that gold is more of a monetary asset, so it's getting more love. But the mining stocks, be they gold or silver, tend to track the silver price more than the gold price. So what will it take to get silver moving? What are you looking at as overhead resistance? And will this move in gold give it an oomph a little bit?
Yeah, well, it looks like the silver contract also rolled over. So I'm looking at the December one I'm seeing is about 2509. I mean, the cash one is 2505. So 2500, or maybe I have to, it might be a little bit higher than that. So basically silver right now is trading right at the monthly resistance. So there is monthly resistance in the low 25s for silver. And so that close is coming up tomorrow. Weekly resistance is at 26. So looking at silver, it's not a foregone conclusion at this point that it's going to make a monthly breakout tomorrow. Yeah, and I think on the quarterly, I'd have to pull up the quarterly chart, but I think there's quarterly resistance around, it might be around 25 or maybe 26. So that could come into play at the end of next month where you get the quarterly close. So silver has not, gold is in a way better position. I mean, it's breaking out of this super bullish cup and handle pattern, as we all know. Silver there's still a lot of supply, 26, 28 around that level. So that concerns me. There's a lot of faulty technical analysis on silver out there that people have to steer clear of. I mean, people have been calling, bull flag breakouts for months and months, and huge breakout from these various trend lines, and we got to be careful about some of that because most of that is really faulty. But for me, circling back, so you have the monthly resistance in the low 25s where silver is basically trading at that right now. Then you have the weekly at 26. I think that's kind of the key confirming indicator here. That's not to say if that fails to break out tomorrow or on Friday that it's the end of the world for this move. Maybe it'll just take another couple weeks or so. But I just think that to me is more of a confirming indicator for this short-term strength, a little bit more so than the miners. And bigger picture, I do think. I mean, if we do see gold, or if and when it moves to 2100 and then moves above it, I think that will be able to pull up silver to at least 28 at that point. So I guess that I know there's a lot of technical things there, but I guess the point is silver has more resistance to chew through. Generally speaking, it lags gold during these breakouts. So I wouldn't be that dissuaded if silver kind of struggles here at this resistance, but we need to keep an eye on it because it is a good confirming indicator for gold.
So then, Jordan, look, we're almost at the end of the year here. So are there any seasonality factors that you're considering or that are playing into any of these moves in the precious metals or any of the underlying stocks within them?
No, I'm just not a big seasonality guy. And if we go back and we look at, yes, the metals have been strong every January, but that's because they've been basically sold, during this secular bear market. Precious metals, that is, they've done well in January because they've been so oversold at the end of the year. So this could be a little bit different, provided that we really hold this strength or even build on it into January at this point. So we got to be careful about seasonality, given that this looks to be kind of a different move here. Most of these gold breakouts are usually in the third quarter or the very early fourth quarter. So this one, again, potentially is coming at the end of November. Maybe it'll be early December. So that can kind of, that and this strength can kind of disrupt whatever seasonality people are looking at. You have to look at, okay, the market as is right now. And I look at all those, positioning, what's the trend, intermarket analysis. You have to look at those things instead of seasonality. I mean, seasonality to me is kind of more subjective. Now, it is interesting because with respect to, the juniors and the smaller juniors, even up until a couple of weeks ago, I was thinking, some of these things, even if we do get a bit of a move, there's going to be tax loss selling. Some of these things could be dead, until the middle of December or end of December. perhaps that's been thrown on its head because of this coming breakout in gold. So we have to be a little bit careful about seasonality and what's been typical in recent years. We have to adjust our thinking probably because the market is acting in a different fashion this year.
Yeah, Jordan, the seasonality of tax loss selling may have already occurred, and we may actually have a more bullish tax loss selling or not have one at all between Thanksgiving and Christmas, as we usually do. But just one more high-level question for you about the playbook changing from a bear market playbook to a bull market playbook. We've talked about this with some other technicians before, but you are a seasoned technical analysis pro. And when you look at the momentum indicators and some of the strength indicators on charts, a lot of people read into that, oh, if it gets to 70 on the RSI or if it gets overbought on the slow stochastics, that it's in danger of pulling back. And that may be true in a bear market, that things start when they finally get over those thresholds, do mark good places to pull back. But in a bull market, things can stay overbought for longer than people expect. Just like in a bear market, they can stay oversold for longer than they expect. So maybe just speak to reinterpreting the charts now from a bull market playbook and not expecting things to always pull back, that being overbought is actually a good thing.
Yes, because in a bull market, you're going to see overbought conditions far more often than not. You rarely see oversold conditions. So I use the RSI, but other than that, I don't really use momentum indicator. I mean, the looking at the RSI, you have to understand in a bull market, typically, you could say in a non-bull market or an average market, whatever you want to use. I mean, the 30-70 can make sense, but in a bull market, usually when you see the RSI go above 70 in a strong fashion, that's kind of a confirmation that you're in a bull trend. So in a bull market, the range for the RSI, it can be 40 to 80 as far as oversold, overbought, or in some cases, it can even be like, if you're looking at some monthly charts, it can be 50 to 90. Depending on what you're looking at, you have to make those kinds of adjustments. And mentally, you have to make an adjustment. And I think what you're saying is right, that you have to understand that we're in a new trend here. When you're in a new bull market, especially one in precious metals, I mean, things can get crazy overbought and they can stay that way for a while. That doesn't mean that you chase every chart that looks like a rhino horn and go straight up. I mean, you don't want to do that. You want to be careful about that stuff. But you do have to understand, if we are going into a bull market here, the majority of these stocks, they're not coming back. Like, the difficult thing is you start these things are up 20, 30%, 40%, 50%, and then you're thinking, oh, I'm just going to wait for a correction. Anybody can tell you who's been in this thing for 20 plus years, and you're coming into a new bull market, and you see these stocks, these juniors are up 20, 30, 40%. When they've already moved that much, and the RSI is going above 70, or seeing strong overbought conditions, it's over. You're not going to get a 25 or a 30% pullback in these stocks. Not until they're up, 200% or whatever. You have to have a new playbook for that and understand that you're not going to get a perfect entry point. So I don't know if I answered your question. I know I kind of trailed off there, but that's when we're talking about a new bull market and momentum and RSI and changing our thinking. I mean, that's how I see it. It's very difficult to do that because, a couple of weeks ago, you're thinking, okay, some of these stocks are not going to move till next year. Maybe I'll buy this if it pulls back 10%. And then it's, suddenly it's up 40% in 2 weeks. And it's really hard to buy at that point. But if you're in a new real bull market, this thing could be up 100% from here in the next, 4 or 6 months.
Yeah, sometimes just taking a look at that longer term chart does also show you the type of upside that some of these stocks can have because of how much they've sold off. But hey, a bull market playbook, that would be much more exciting for all of us here in this sector. Hey, Jordan, and hopefully it does continue. Just look at the RSI on GDX, the monthly chart. It's just getting above 50, so still a lot of room to run higher there. Hopefully this all continues. We'll watch the price closely with you, and we will be chatting with you again in the near term to follow up on some of these technical levels and especially get an update after the month closes on Thursday. Jordan, thank you as always for your time. It's a pleasure chatting with you.